Hey everybody, welcome to my channel. My name is Justin. Thank you so much for joining me today. Today I want to talk about AMC. Is this a walking zombie company? What spurred this video is I'm on a couple different investment forums, and this morning there was a gal that posted a question. She had $1,000. She wanted to get some suggestions on what company that she should invest in and try to double her profits in the next 3 months. And of course, a bunch of people jumped in and started giving their opinions on it. And the number one company that was talked about was AMC, which I found kind of interesting. So I thought this would be a good opportunity to talk about AMC. They actually came out with some news today. This is December 30th. And I want to give my opinion on what I think this company is going to do here going out into the future. Is this a good time to buy? This is a good buying opportunity. So stick around and you're going to find out. Welcome back, everybody. My goal here is to help you achieve financial freedom by investing in your future and investing in yourself. Let's talk about AMC. They had a 70% drop in their stock price this year. So pre-pandemic levels back in February, they were at $7.78. They saw their stock drop below $2 a share in March. Today, December 30th, it's sitting around $2.16 a share. So on paper, it looks like it might be a good buy. But let's take a look at their revenues and their profits, compare it last year versus this year, and kind of look out into the future and talk about what's kind of going on just in their sector and what could be hurting their business model potentially going out into the future. So let's take a look at revenue. Quarter 3 of 2019, they were at $1.3 billion. Quarter 3 of 2020, this year they were at $120 million. Ouch, that's over a 90% drop in revenue overall. And you know, a lot of states have been tough on the movie theaters. They've had to really limit their capacity. A lot of states, well, I won't say a lot of states, but a number of states have, you know, not even allowed movie theaters to open up in certain areas. And just the fear of people going out and going to the movie theaters and not wanting to expose themselves and get sick. Obviously, there's less people going to the movie theaters just in general, and so they've seen that revenue drop significantly just in general. And if you look at net income last year, quarter 3 2019, they had a loss of $55 million. This year, quarter 3, they had a loss of $900 million, almost $1 billion loss, which is pretty significant, obviously. And guys, this market, the movie theaters in general, they've really seen a decrease in attendance even going into 2020. So 2019 overall, they saw a 4% decrease in attendance. I think that would probably continued into 2019. And guys, there's just more options that are out there. I mean, people like staying home. They like to stream shows and movies. I mean, you talk about Netflix that's been coming with their own movies. You're talking about Disney here recently that's starting to try out movies on their streaming platform instead of sending out to theaters, like Mulan, for example. So people have different options than just going to the movie theater. Now, I do still think that there's a demand for people wanting to go to the movie theater. Maybe there's a specific movie that you wanted to see. You know, I have a family of 6, and so you know, if you look at this article here, the average price per ticket back in 2019 was about $9.30. So a family of 6, I mean, you're talking $10 a ticket. That's $60. You're buying a couple of popcorns and some sodas, and I mean, you're lucky to get out of there under $100 for seeing one movie. And so families have more options now. I mean, would you rather spend, you know, $20 on Mulan and seeing that at home, or spending $100 and going out to the movie theater? And especially if you have young kids, that's hard to do anyway. And so as consumers, we're going to have more and more options. And, you know, the question is this business model sustainable long term for AMC? And keep in mind, like I said before, I mean, 2019, they saw a loss. 2018, they were profitable, but barely. I mean, they had over $5 billion of revenue, but they only had $110 million of net income for that year. And so that's a bit scary of seeing this decline in their business anyway before even the pandemic happened. And if we take a look at their free cash flow over the last trailing 12 months, it's been negative $700 million. Again, ouch. And if you look at the past 3 years, and if you remove the trailing 12 months, so if you look at 2019, 2018, 2017, pre-pandemic levels, they had a loss of free cash flow of about $60 million over those 3 years. So that's not good. If you look at their balance sheet, as of the last quarter, they had about $400 million of cash on their books. And keep in mind they had a $900 million loss in the quarter, so that's pretty scary. Not only that, but their long-term debt is around $6 billion. So if their long-term debt is $6 billion, they've had negative free cash flow even before the pandemic for 3 years. How are they ever going to pay off their long-term debt? Not only that, but the news that came out today, they're offering more shares. So they're offering 50 million more shares. So they're going to try to bring another $125 million of cash. And keep in mind, it was not long ago they offered up 200 million shares, which I think they only sold about 50 million of those. Just trying to keep afloat right now. They're just trying to get some cash in so that they can pay their landlords and try to get through this thing. But they're just building up more and more and more debt, and they're diluting their shareholders. I mean, they are completely going against the best for the shareholders. I know they're just trying to stay alive right now, but it's not a good situation at all. And the big issue that they're having right now, they can't go to banks and just borrow money. I mean, what bank is going to want to loan this company money? I mean, they're not profitable. They're burning through cash like crazy. I mean, there's so much uncertainty. What's going to happen with the vaccines, when stuff is going to start to open up, when people feel safe going back to the movie theaters, and so no banks are going to want to loan money. So they're just trying to offer out more stock, which is just diluting their stock further and further and hurting the shareholders that they already have. So what is my personal take on AMC? Guys, I'm not a financial advisor, so don't listen to somebody on YouTube. But my personal suggestion would be stay away from AMC. Please do not buy AMC. This reminds me a lot of Taylor Brands. Taylor Brands, if you're not familiar with them, they actually owned Men's Warehouse. They own Joseph A. Bank, K&G. They claimed bankruptcy here in the last 18 months. And I look at AMC and Taylor Brands as being very similar. They're completely different sectors of the market. Obviously, movie theaters is more about entertainment. Taylor Brands is more about clothing, apparel. But what Taylor Brands did or didn't do is that they had the same business model back in 1980s as they do in the 2020s. And they didn't change anything, so they still are trying to rent out tuxes, or they're selling suits, selling ties. The times have changed. I mean, I can't remember. Actually, I've never worked at a company that has required me to wear a suit. I mean, nowadays it's business casual. In fact, it's so much business casual. The last two companies I've worked for, I could wear jeans and a t-shirt, and it's not a big deal. So, the demand for wanting to go out and buying, suits and ties and all that has significantly dropped over time. And Men's Warehouse has not changed. Joseph A. Bank has not changed. They didn't adapt with the times. While there's other, companies out there, I'm thinking of one like Tuckett, for example, that's out in the malls. They make these perfect, dress shirts that are the right length, so you don't have to tuck them in. They look okay. Men's Warehouse just haven't kept with the times. They've gone completely bankrupt, and they're still a company that's out there, but they're struggling big time. And I look at AMC kind of being that same way. They have not adapted over the time as streaming is becoming more and more popular. As streaming companies like Disney Plus, Netflix is offering up their own movies and not putting them in the theaters. What is AMC going to do? So AMC has not adapted, and this is a company that is, in my opinion, a walking zombie company, and it's just going down. If you're going to invest in this company, you better be willing to lose everything that you have. I mean, the risk for this company is so much greater than what the reward is. You're playing Russian roulette, in my opinion. AMC's in serious trouble. I think the movie theater business is serious in trouble, and they're going to have to adapt. And I don't know what that means, but they're in serious trouble. So I'm not touching this company. I would suggest no one touch this company, really, unless you want to potentially lose everything that you have in it. So those were my thoughts, guys. I'd love to hear from you. What are your guys' thoughts on AMC? You think it's a walking zombie company? If you enjoyed this video, please like, please subscribe if you want to see more investment videos that are out there. And I appreciate all you guys that are out there watching this video now. Catch you guys on the other side. Take care and God bless.